study that suggested that men were more comfortable applying with 60% of what the job role was asking for. Women needed to feel like they had 100%. And again, we can kind of question parts of the study, but I think there is a telling nature there that my worry is if we keep telling women so bad out there that they might just go, oh, well, it's so bad and my chances are so low, like who am I to be the one to break it? And that we might risk playing into some patterns we're still trying to shift in women's self-belief and their big vision. I think the other thing that we're maybe not talking about enough, and this is a really nuanced point, so please don't like microclip me on this because I will get in so much trouble saying one part of it. There are not enough women applying for VC with venture backable businesses.
As innovators, we're obsessed with speed. Faster workflows, faster decisions, faster funding. But no one's asking what happens when you scale a system that was never built for everyone. I'm Cien, and this is Human in the Machine, where we ask the harder questions about how we build, lead, and connect in a world increasingly shaped by AI. Today, I'm joined by Hattie Willis, founder, community builder, and on a mission for a more inclusive startup future. Through Guestworks and equitable, she's been quietly but powerfully redesigning how entrepreneurship is taught, supported, and funded, especially for those the system routinely overlooks. She's not here to play the game better. She's here to rewrite the rules entirely. And in a moment where algorithms are learning from our past to shape our future, her question is simple but seismic. What if the data is wrong about who belongs? If you've ever wondered how to build communities that hold space for truth, complexity, and real equity, this conversation is going to move you. Hattie, welcome to the show.
That is genuinely the best intro I've ever had. Is that written by AI? Because I need that AI. I need to train my Launch Lemonade bot to do that for me. It's great.
Correct, it is.
I love it. Also, I feel like people who know me rarely call me quiet, so I'm quite flattered that I got a quietly in there.
Love it. Well, I don't think you're quiet. Not loud either, but you're just perfect. Anyway, let's get into it. Hattie, you've been pushing for more equitable access to capital, but also encouraging founders to step away from traditional fundraising. Do you see that as rewriting the rules or learning to navigate around a system that still hasn't changed?
It's a really good question, and one we actually had a investor founder breakfast this morning. We ended up talking about this exact point. I'm struggling to reconcile it, to be honest, because the way I see it, it's two things. Number one, before you play a broken game, make sure you really want the outcomes from that game. And what I see is a lot of founders who are essentially going into courts where the referees are biased, where they haven't got a hope of winning, and they're gonna break a leg trying to play and burn out in the process. But fundamentally, even if they won, it wouldn't give them what they wanted. And that really frustrates me. So I am trying to challenge people. Is fundraising really the right path for you? Because I think it's wrong that we've defaulted to that being the only way to build a startup. It's not necessary to every company, and B, the hypergrowth venture-backed funding path is actually quite particular to want to go on, and I think we're not having that conversation early enough for founders to make an informed choice, and that really worries me. On the other hand, for founders who do want to go on that journey and for who startups really need it, and I think we need to talk about this idea. I'm trying to get this idea of founder funding fit out there, that we need to talk more about not just what's right for the business, but what's right for the individual founder. But I think this point for me is that if you are going to go after funding, let's increase your chance of getting it by acknowledging what is broken in the system so that you're not internalizing that it's you that's the problem. It really frustrates me that if you're going to get 100 no's more because you're an underrepresented founder, that might damage someone's confidence more. But also so you can increase your odds of getting a yes, because there are things you can do in funding that are going to change that.
I think that is definitely the right answer, and it makes total sense, and I definitely resonate with that. Like, where do I find the right places or the right games, and how do I play it? But at the same time, as a strong woman who is very opinionated and want to claim equity, I'm struggling, resolving, kind of finding that fine line between reclaiming my agency, wanting equity, or just accepting that am I just being quietly shut out?
I think the question we have to come back to is you being shut out of something you actually want to be in? And if yes, then we've got to change that, because that's incredibly wrong. But what I'm fed up with founders getting into or essentially being told by the system that that's the game that they should be playing. And fundamentally, and I think this is an important point, like it is broken for so many people. So even if you are in the tiny minority which gets funded, which essentially we know that the vast majority of funding is going to a very small group of people, it's going to people who are white, middle class, privileged educational background, privileged economic background, people who are typically straight, able-bodied, and that is actually such a small category. And even those that it goes to, getting venture funding isn't necessarily the recipe for a successful company that gives them the personal outcomes they want. And there are still plenty of cases of founders who do successfully get venture capital, and maybe the company dies because it can't keep growing fast enough for the venture capital curve, or who get venture capital and over time get so diluted that they sell so many shares in their company in order to keep growing at the pace that's demanded, that actually personally they're not getting the same outcome from, even if they do sell the company, as if they'd had a bigger share in a smaller pie. And so again, for me, it's a question of, I want to hammer on every door I'm not allowed into, but there are some rooms I don't want to be in, right? I think before we for just the purpose of equity, say I want to be in this space because others are in it, let's check it's the right space for the individuals. Because what does worry me is that individuals who are underrepresented end up carrying the weight of redistributing bias, and then they harm themselves in the process. And I don't think, for me, I see it as a big picture piece. What we want is equity in finances, ultimately an equity in opportunity. And if individuals are doing things that harm their personal finances, and then the circularity of that, their ability to reinvest, ultimately that's doing more damage to the system, even if they're getting into the right rooms in the process.
And I want to poke on that a little bit. So there are now a lot of AI-powered technology that's coming out to power faster due diligence or better due diligence or better processes on how to select the right startups to invest in, coming from the VC world. And let's say you run into a startup that's founded by an underrepresented founder, and let's say, yes, VC funding could help the product. Now, you talk about the harms to the founder, whether it's personal or even, like we've heard stories where the startups fail because it's been funded by VCs.
Yeah.
How are you going about this? Do we just is there a point in trying to change that system and inserting ourselves even though we know that it isn't the game that we need to play?
And I think this is what I think for some it is the game you need to play it. And I think this is where I come back to, if I'm working with founders to try and work out what the right path for them is, I always break it down into two halves. One is, what's your personal appetite in the next year, 5 years, 10 years for uncertainty, financial instability, and also to go on a really intensive growth curve, which is going to take a lot from you, from your team. It's going to change who you hire, how you lead them. And typically we run founders through a kind of series of thought experiments to try and help them get at that. But on the other side, there are businesses that require venture capital funding to play. But if you think about 15-minute grocery delivery startups at the point which they were really popular a few years ago, the reason you could, as a consumer, get your 15-minute groceries for free for like 4 months was because everyone was venture funded and was giving away heavily subsidized groceries to try and get market share, because there was a belief that that was a winner takes all market. Even without going into whether it is or not, if everyone else in your space is behaving in that way, it can be really hard to get a toehold and even keep it, let alone grow to the kind of size that might excite you as a founder. So this is where I come at it from. Funding strategy has to have these two elements: what's right for you and what's right for the company. Those two things need to align, or there needs to be an adjustment made to the plans for scaling the company, or you need to reconcile, does this actually work for you and your co-founder? But if you decide, actually, I'm really excited by this hyper growth journey, I'm at a point in my life where I can't wait to do that, and my business, I think, would hugely benefit from it, I can deliver more impact, I can grow at a pace that's going to allow me to sustain competitive advantage, not just get it, but keep it, then I think venture can be an amazing path. And at that point, then it's about, how do we help more people get into it? And I think what worries me about some of the AI usage, some of it I think is incredible. So shout out, for instance, Ada Ventures, which is a fund that particularly focuses on backing underrepresented founders. They've created an AI tool where you can get feedback on your pitch. That then allows them to see more pitches, as well as giving real value to the founders who maybe their first version of their pitch actually wouldn't wow Ada. And they can then iterate and have more of a chance, compared to it coming down to who's got onto the right accelerator program or who knows someone who can go through their pitch deck. So some AI I think is beautiful and is going to really level the playing field. I think also the AI that allows founders to look more professional with less. So design AI, for instance, that allows their pitch decks to look incredible without having to have a designer paid to come onto it is insane. What we can do on social media, so the reach we can get before funding is incredible. What worries me is where it's being used for due diligence and essentially relying on pattern recognition, which actually hasn't worked historically very well, even for existing venture capital funds. So who gets venture capital isn't actually a great predictor of who will build $1 billion business. Even within VC, we know that 90% of founders will fail. And there is this real myth that once you get venture capital, that means you're on this path to success. And so I worry that by looking at the data of who's been funded so far, all we're doing is reinforcing the biases that we know exist around essentially their kind of affinity biases, which is, I like what looks, sounds, seems like me. And that's coming from a really innocent place, but can do real harm. And so I worry that we're ingesting all those biases where managers have gone, and I'll talk about one that I would be privy to. You know, I went to Oxford. It's really easy for me to bond with someone who went to Oxford because I can go, which was your favourite cafe and which college did you go to, and isn't punting with Pims fun? Rah. And the problem with that is it's so easy to do, to form a connection then, that's one of the things that's contributed to this historic funding gap for people who don't have those easy affinities with people who sit in the positions to spend the money. And my worry is that when we're then building AI systems off that historic data, we are going to really disadvantage people who historically haven't been funded. And that is going to do so much damage to other initiatives that are trying to make interventions.
And that's why I love communities like If We Raise, and the communities that you're part of as well, because it opens up conversations. And what was once thought as radical thinking perhaps before is more understood. It's permeating in the startup psychology. But so yeah, we're both believers in the power of community. But I'm also curious, how do we ensure that these communities aren't just safe spaces where we survive, but spaces that can actually change power dynamics?
One I've been thinking a lot about, and I'm going to throw it in because I think it's important to talk about, not because I think I have the answer, is around getting a balance between safe spaces where you might have a lot of homogeneity within the space, like all female founder spaces, right? It can open up a level of vulnerability. You and I have both benefited from this hugely when we've been in these spaces. Sometimes you feel safer because you feel there's an inherent getting it from the rest of the group that allows you to share. But I do think we lose something if we only go to those spaces, because actually I think a lot of the change comes from allies driving it. So, for instance, my wonderful co-founder Tim is a guy who is incredibly passionate about helping female founders as well as male founders. And I think there is a danger that if we start to kind of separate out too much, and I'm not saying there's no role for that, I think it plays a really important role, but if we start to kind of separate out too much, I think we risk something. And I also think, particularly when it comes to funding, something I've been thinking a lot about recently, I talk a huge amount about underrepresentation for female founders, which is a huge problem. But I'm also getting really worried about things like the growing educational gap between men and women, which is increasingly actually seeing men really grow further away from women in educational attainment. And that really worries me because we're going to start seeing men struggling to get funding down the line because actually they haven't gone to the right university. And we're going to I'm worried we're going to rebound in inequalities. And what might happen is the gender equality gets better, but actually the socioeconomic inequality gets worse. And so I'm worried that some of these spaces, and it's definitely something I've been guilty of in the past, it's easy if you sit in a space under one identity or even two identities to really connect with the problem from your lens. So for me, it would be like the female founder, right? That's the challenge I'm going to have. But I'm not going to have a challenge as a founder of color, as a founder from a lower socioeconomic background, as a founder who didn't get educated by a red brick university in the UK. So that I think the communities have to keep having these conversations about how is this shifting, who are we potentially excluding or not inviting in to get the support along the way, and also how do we bring in more allies into the spaces who can help shift the dial as well.
I am so curious about what you think about this, actually, because when I started my founder journey, there was a statistic: only 2% of VC money went to female founders. Everyone has done, especially including yourself, has done a lot of work around this. Now, last year, I saw another statistic: 1.5% of VC money has gone to female founders. That has decreased. And nominally, I guess 0.5, but for the
proportionally, that's a huge decrease, right?
It is for us. Now, what are we getting wrong? I mean, are we getting it right? Are female founders just have had enough of fundraising from VCs and we're finally just doing it ourselves, or what is happening?
I don't think we know the answer. Like, candidly, I don't think we know the answer. I think there's a few things that could be at play, and I suspect it's a kind of really complex combination of a few things. Thing number one, which is the kind of system challenge, when economics get worse, people tend to get more risk averse, and means they default more to things like pattern recognition, things like affinity bias. So those previous biases do tend to entrench. We've also seen a pushback against DE&I. I think that's having an impact in the space as well, because there, I think, is still a core part of people that believe that women investments were quite tokenistic, not for everyone, but for some people. So I think that that's having a shift. I don't know how much, but I think that's having an impact. Equally, and this is something I really battle with myself in, and I wonder a lot at the moment whether I'll look back in 5 years and think I did more harm than good on this one thing. I hope in general I'll think I did more good. The worry I have is by spending a lot of time talking about how bad the stats are, we might dissuade people who would be really capable from even trying. And there is another stat, which is that if you have a job role, this is not in startups. Generally, there was a study that suggested that men were more comfortable applying with 60% of what the job role was asking for. Women needed to feel like they had 100%. And again, we can kind of question parts of the study, but I think there is a telling nature there that my worry is if we keep telling women so bad out there that they might just go, oh, well, it's so bad and my chances are so low, like who am I to be the one to break it? And that we might risk playing into some patterns we're still trying to shift in women's self-belief and their big vision. I think the other thing that we're maybe not talking about enough, and this is a really nuanced point, so please don't like microclip me on this because I will get in so much trouble saying one part of it. There are not enough women applying for VC with venture-backable businesses. What do I mean by that? There is a different, and by the way, there are still lots of women applying with venture-backable businesses who are not being funded. So this is not the like salve to everyone who's not investing in women to be like, oh, there just aren't any. There are. However, even female VCs I speak to, we're seeing a shift, and actually it was a really interesting conversation at dinner this morning. One was saying for every 80 investments their fund sees, they invest in one founder on average. And they're just seeing such a disproportionate number of male investments come into them that it's actually really hard to get parity in how many they invest in if you look at the kind of orders of magnitude of what they're sifting. Another VC at the table had put in quite a lot of effort to advertise that they wanted female founders, and they actually had got up to 42% of their applications were women. So this isn't to take all of it away from the fund's responsibility to shift this, but we do see patterns where women will often build businesses that can get to things like revenue faster, can grow maybe more sustainably and don't always need VC funding. Some of this, again, it's super complex. Some of this I think is still linked to the fact that a lot of responsibilities for things like childcare will sit with women. Women's careers get impacted differently because there isn't really good paternity. Women take the brunt of that with maternity leave. And therefore, there is this really tough battle for women who want to have children, that they're often thinking of launching ventures at the same time they're thinking of having a family. And that changes how much risk they can take. So all of this kind of compounds it in a system, and often means that women tend to focus on building more kind of like scalable lifestyle businesses as opposed to necessarily venture-backable businesses. Again, in the odds, not to say there aren't enough women doing it. I just would like to see more to help rebalance the system. And the other thing is, I think just sector-wise, we have seen a shift in the last few years away from consumer-type businesses getting VC funding in the same way they used to. So if you think about 5-6 years ago, were loads of direct-to-consumer brands getting big funding. What we then saw was a few things shifted, including big things like it becoming more expensive to advertise on social media because of changes to tracking of data and changes to tax law, meaning, Instagram ads have gone up, by multiples from where they used to be. All of that makes creating a direct-to-consumer company much more expensive. So venture capitalists have got quite burned by that. And so they've moved away from the direct-to-consumer space. Well, if that was one that represented women more, because we also still have a background of problems where we haven't got enough women into STEM. So we don't have enough women in spaces like bioscience, deep tech yet, though that I think is shifting with the educational background. Essentially, I think we get to this really complicated soup of things that are contributing. And what we need to design for are different systems interventions that can change this, but also are aware of what the other contributing factors are. Because it's really easy when you have this complex challenge, I think, to get simplistic in, we'll just do this initiative, but this initiative actually doesn't work because it's missed something else, or it does more harm than good because it's missed something else.
I love that. I think you've explained it so clearly and almost optimistically as to what's wrong, but also at the same time what practically can be done. And bootstrapping has become sexier these days. I'm a proud bootstrapper, although we are fundraising, funnily enough. But it was my AI who actually put this question together. And I think you've answered this in few ways, but I just wanted to confirm. And I want kind of maybe a different version of that answer. We're asking underrepresented founders to bootstrap, but is this just us asking them to do more with less, just wrapped in a new narrative?
It is, but that doesn't mean it's a bad outcome for founders. This is I'm not sure it's a very popular statement, but I've made it quite a lot and I kind of stick by it. And I think the only reason I stick by it is because the costs to bootstrap are coming down so far that actually is becoming more viable for people even who aren't on high income jobs. So previously, I think the challenge with bootstrapping was if you wanted to get a product to revenue, you would often have to, if you didn't have someone technical on the team, you'd often have to outsource it to a design and development agency. And what that would offer, if you're building a tech business or do lots of product development, that's still quite hard. And that meant lots of people who were bootstrapping essentially were in really well-paid jobs and either doing this as a side hustle or had managed to make great savings, and then they could invest their life savings into a product, which is still risky, and I don't want to underplay that risk, but there's still a massive privilege in being able to do that and afford to do that. I think what's changing is as the cost to build with low code tools comes down, it is increasingly accessible for people who are working much less paid, lower paid jobs to either work alongside. It's still hard if you're juggling multiple jobs. There's still a barrier there, especially if you have carrying responsibilities. But that is becoming more and more accessible, especially things like free trials. And so I think we are asking founders to do more with less, but also the less is shrinking. And I think the other critical thing here is the reason I'm not so against it is I actually think it gives founders options. So if you prove to yourself you can get to revenue earlier, or you can at least prove demand, you're in a much stronger position because hopefully you can negotiate better terms, better valuation, you're selling less of your company. So there is a good positive impact even if you fundraise. And similarly, you might decide, hey, do I need to fundraise? I'm growing it well. And then you can keep 100% of your company and maybe grow it to a nice exit in a few years. So I think we are asking founders to do more with less. But that said, I don't know that I think net is a bad thing. And I think what it also stops, I know some incredible founders, including female founders, who would say that they were really lucky that they raised when it was just a kind of hope and a prayer and an idea in their heads. And they would now say that was one of the biggest mistakes they was taking money too early, because they started building for investors rather than customers. They started building the business their investors would be excited to invest in the next round rather than the one they wanted to build as a company. So I like the idea that founders get further and give themselves more of those questions and really interrogate those elements before they commit.
Hattie, if you could redesign the startup ecosystem from scratch, post AI, post bias, what would you build first, and who would you be building it for?
I think it depends on what the post AI means. Like, do we have to go back and rewrite the AI because it's internalized a load of bias, or is the AI? I think there's like genuine question here of how much choice we'll have in redesigning the system if we've built bias into the next version of it. If I can make all of the AI trained on fair data and the AI actually takes us forward in assessing, the thing I would love to see with AI, due diligence that looks at what someone's done with the resources available to them and how that projects out what they're going to do going forward. Because I think there are a ton of people who actually, with real grit and hustle, get so far, and they had so much less than others who are at the same point, but they started with a massive leg up. And to me as an investor, I'm much more interested in how far did you get with what was available to you than how big was your leg up. So I think that would be amazing. I think the other things that I would change are equity in who is spending the money. This is such a circular loop, right? If you don't have founders being backed, then you don't have founders making the big exits who then have personal money from those big exits to invest. And then they don't invest in people who look like them. And the cycle, just the money keeps going in very similar patterns. So if I was going to try and really change the system, it would be to look at who is investing the money. And currently there are just huge gaps in funds and who's deploying the money. And some of the things that scare me are, even within funds where there is more gender, for instance, diversity, there's normally very little other diversity. And I think that really matters. I think one of the biggest drivers we're not looking at enough is a socioeconomic background piece. I think that really scares me how much that's going to keep that cycle going. But I think even those who are in a fund, how much power do they have in the fund? Do they have carry in the fund? Do they make money if the fund returns? Because what happens is more funds have made, for instance, women general partners, but they're not general partners who have any percentage payback if the fund actually performs really well, unlike other GPs. So I would change who invests and who makes money from investments. I would also potentially look at the venture capital model from scratch and go, who is this actually working for and to what end? It's, on one hand, I think we need capital that is willing to take risk, and VC is the only one that is willing to put in the scale of capital at the level of risk. Angels will put in typically smaller checks at an earlier stage, which is more risky, but venture's the only one who'll put in those big checks for real risk. And I think we need that. But equally, if you look at the way it's working, it's not working for very many people at all, right? We've talked about how few people actually get funded. Even if you do get funded, your chance of being a $1 billion company, which is a successful outcome for VC, is a 0.00006%. That's not great. And that's why 20% of VC funds are the ones making more than 80% of the returns of the whole sector. So ironically, the VC model works exactly like the founder model. Most funds won't even give investors back the money they put in, let alone make them any money. And so I think something has got broken in the system, and it's harming founders, it's harming investors, and it's not going to work long term. I don't know what the answer to that is, though, because I feel like we need something that's going to take this risk, and we can rely on it being the government. So yeah, those are the things I would look at, I think, as a first pass.
Hattie, I think you need to write all of that down and make a proposal.
Surely your AI will do it for me.
Yes, we have recorded that actually, and we can put a proposal together for the government.
I love it.
Do this now. And lastly, Hattie, I'd like to know, what do you think about this question? What do you think does it mean to be human in the time of intelligent machines?
I love this question. I keep saying to founders, what AI can't do is connect to your customers in the same way you can. And that doesn't mean they can't create compelling adverts and avatars that look and sound and connect with someone. But I think like the deepest core level of being driven by a purpose and an impact that you get to set, and then going and making deep connections, not just with customers, but with people along the way, that charges you and amplifies that impact, for me, is what it's all about. So to give you an example, at Guestworks, we go into schools, universities, accelerator programs and corporates, and we deliver hands-on training. And that's all done by founders who are incredibly experienced, have their own stories to tell. And that storytelling, that having lived it, that they bring in to human interactions when they're teaching in a workshop or coaching founders, that makes someone feel that they're not alone in it, I just don't think a machine can do.
Hattie, you're so eloquent. Like, it really, like, how you weave your words is truly amazing. And I'll be sharing all your links in the show notes as well.
Thank you.
And that's it for today's episode of Human and the Machine, where we don't just talk about what's changing, but who it's changing for. Hattie Willis is building more than founder education, but she's also building ecosystems. Ones that don't just give underrepresented talent a seat at the table, but challenge what the table even looks like. In a time where AI is deciding faster and more often who gets seen, funded, and believed, Hattie reminds us that community isn't just support. In a time where AI is deciding faster and more often who gets seen, funded, and believed, Hattie reminds us that community isn't just support. It's strategy, it's infrastructure, it's resistance. If this conversation challenged how you think about access, fundraising, or innovation, share it, pass it forward, and keep asking the uncomfortable questions. I'm Cien, and this is Human and the Machine. Until next time, stay bold, stay curious, and above all, stay human.